Hey everybody, it's Brian Shannon from Alphatrends.net. Today is Friday, the 5th of January. Hope you had a good week. The market, a little bit of profit taking here so far to start the year. Not really unexpected, as we know. The S&P down just 1.5%. Semiconductors led the way lower with a 5% loss, which of course dragged the NASDAQ down 3%. And the group that everyone thinks is going to lead the market this year, the Russell 2000, was down 3.4%. Volatile week for Bitcoin, but still ended up with a 4% rally, and oil up 2.5%. We'll take a look at all of those here. Let's take a look at the S&P 500 first. On the left, of course, we have the daily time frame. Each candle represents one daily, and on the right, we have a 30-minute time frame. Let's focus our attention over here to the right, and the first thing we see is a very clear pattern that continues that we've mentioned previously. That is a pattern of lower highs and lower lows below the declining 5-day moving average. That, my friends, is a downtrend. It doesn't mean that's the big trend. It's a pullback within the primary trend over here on the right. And if we look at the weekly time frame, we're in a big uptrend. This is a bullish environment that we're in. We're simply experiencing a pullback. And my philosophy is we wait for trend alignment before we get involved, meaning we want to see that the buyers regain control of the intermediate term time frame, and that would put it in alignment with the daily time frame. So what that might look like for the S&P is something like this. It's, by the way, been finding supply right at the year-to-date anchored VWAP. We have the possibility that it might unfold something like this. This is what I would really like to see, is that we rally up to the 5-day moving average, maybe get above it, a little shakeout, and then as that 5-day moving average is flattened out and rising, this is where I want to be a buyer. I don't want to buy pullbacks. I don't care if I don't catch the bottom. I say that all the time. I see the frustration from people who are trying to buy the dip in here. It just doesn't make sense. Buy as the buyers are back in control, and then set your stop underneath the most recent relevant high or low for your time frame. Either, sometimes I stagger it half here and half there if that's the way it unfolds. I'm always flexible, which is why I do these updates every single day for subscribers to Alpha Trends, and here on YouTube once or twice a week. The NASDAQ, same story. We're down to the anchor volume weighted average price from this gap, and that seems to be holding so far, at least 2 days in a row. But just because we haven't gone down here, today, doesn't mean the buyers are in control. We have the same clear pattern here of lower highs and lower lows below a declining 5-day moving average in the year-to-date anchor. So the same type of situation is what we want to see here next week, is something like this, that maybe we rally up, pull back, and then start to get going. The low-risk, high-probability trades occur when the buyers are back in control, we're not trying to catch the bottom. If you're trying to catch the bottom, you might have purchased here or here or here, here and here, and thought maybe you had the bottom. It's much lower stress and risk to purchase over here when the buyers are in control. Set your stop and then let the market do the rest for you. So all of these markets are undergoing a little bit of profit taking. That's it. The Russell 2000, a little bit worse here, as we noted. This one declined today as well. The other markets were higher, but we lost 52 cents in the Russell 2000, below the 20-day moving average. So as I always say, we look at these levels as an area of potential support. We look at them as a level of interest. A level of interest, be it a moving average, an anchored VWAP, a Fibonacci, they're all the same to me. They're a level where we take a look at the lower time frames to see if there's evidence the buyers are gaining control. For me, the evidence occurs when we have a flat to rising 5-day moving average and the market is back above that level. So same story. Maybe it does this. I wouldn't be excited, not with a declining 5-day moving average. Instead, I would be more interested over here once that 5-day moving average starts to flatten out. We're not there for the Russell 2000. We can look at all these levels on the downside and say, this is where it might bounce, and the next level would be the anchor from this point right here. That also ties in approximately right down here with the 38.2% of the retracement of this low to this high. So sellers are still in control. That's what you have to remember. Otherwise, if you're trying to buy, your P&L will tell you right now. And as I mentioned on Wednesday, this is a perfect time to really get disciplined. This is a new year, and I think it's great that it starts out with some profit taking. It is telling you, forcing you to become more disciplined. If that was one of your goals for 2024 in the market, This is the perfect environment to learn it and to be patient. It can be difficult to wait for the right opportunity to purchase because you always think you're going to be missing out on these little rallies. But if you look at market structure and say it's got a declining 5-day moving average, maybe you can day trade these little bounces. There's nothing wrong with that. But I wouldn't be looking for a structural shift. A structural shift means the buyers have regained control on this 30-minute time frame. A structural shift would occur somewhere over here, not while we have a declining 5-day moving average. So the semiconductors also guilty until proven innocent. The biotechs have been a little bit stronger, but they are down for the year now after today, and we have the same exact, very clear pattern here. Lower highs and lower lows below a declining 5-day moving average. There is no advantage to being a buyer in here. Let these things settle in. As we mentioned, in the closing video for the end of the year, I'd love to see them come down in towards this level and then buy over here on the weekly time frame. That would set up the potential for a really nice move. Right now, these things are extended. They need to digest these gains, and that's the message that we're getting as institutions are saying, let's reassess here. Let's slow down, take our foot off the gas. We locked in our gains for last year. Things are extended. Let's raise some money and buy them back at a lower price when it makes more sense. Some of the individual names, Apple has been getting hit hard. There's been no reason to buy this stock for the last 2 weeks. It's been below a declining 5-day moving average. And notice how it rallied up through the 5-day moving average. That's not something to get excited about because the direction of the 5-day moving average was lower. Now we're into this zone where we have an important level, which is we've got the anchor from this peak is that red one. We cut through that. We cut through the 50. We cut through the 20. There was no support there. Those were potential levels of support. They were levels of interest. Now we came and touched the 200-day moving average today, and this has been a prior important level of resistance over here. Perhaps it turns into support, but let's look at the 30-minute time frame. Is there any evidence that the buyers are gaining control, or do we see a very clear pattern here of lower highs and lower lows? What do we want to see here for the buyers to gain control? Maybe you're going to buy it at the 200-day moving average and set your stop down here. And that's fine if that's your strategy. I'm not trying to convince anyone what to do. I'm telling you, I've been doing this full-time since 1991. The reason I'm still in this business is because I don't buy stocks as they're so-called dipping. This is much more than a dip. We just lost 10% in here. That is a major hit. If I'm a swing trader and I'm trying to buy because I think it's a good value at the 20-day moving average at 193, and then 5-6 days later it's down at 181 rather, it's lost 12 points, 6%. I'm not feeling too good. That's not that doesn't give me confidence. What gives me confidence to engage in the market is to understand market structure. This is what I've written about in both of my books, and they're, of course, available on Amazon. If you're watching this on YouTube, please give it a like, give me a comment, etc. Let's take a look at, what else did I want to, let's talk about Tesla. Tesla's at a potentially important level here. We're at the 50-day moving average, right? We've also got what? We've got the anchor from this low right in here. We've got the anchor from that low. We're right on it. We've bounced from that level once before right here. And now, are we bouncing? No. You can't call that a bounce. That's not a successful test of that anchored VWAP. It's just settling in here, and the buyers are trying to defend this level for now. But what do we want to see? The same exact thing. We want to see it do this, and then perhaps it can continue to move higher. But right now, you're just throwing your money away buying Tesla. If you watch my video about the pot stocks, I haven't mentioned the pot stocks in a positive light since 2021. And this is the first time I had mentioned them. I did a video. It's available there on YouTube if you haven't seen it. And my number one pick was MSOS. I'm long this stock. It's having a great move. It's not a great move. It's starting to move here. It's got a great longer-term time frame. Everyone seems to be obsessed with Tilray, but Tilray is still stuck below last year's anchor. It's not the good one. Go for MSOS. Go for MJ. Just finally broke above that anchored VWAP from last year. But I will mention, be careful with these stocks. They're highly speculative. They're mostly unprofitable. They're moving up because of news. And on Tuesday, Tilray is reporting earnings. So be very careful about those. Some of the stocks I'll be looking for as a potential. Let's take a look at some of them that are maybe starting to make, turn the corner there the way I was mentioning that we want, for instance, the S&P to do, the way we want this to happen. Well, if we look at a stock like Carvana, you can see it's still a little bit early in there, but the 5-day moving average, what we want to do is anticipate its direction. This was 5 days ago. So on Monday, we get rid of that. That tells me even if the stock rallies up here, that 5-day moving average is still going to be declining. On Tuesday of next week, we get rid of this data right here. So if we, let's say on Monday, rally in Carvana like this, pull back, and then on Wednesday, this 5-day moving average will start to flatten out. That's one I have an eye on. I have an eye on Airbnb. It's pulled back here on the daily time frame. We can see that into this anchored VWAP from that prior low right in here. And on the 30-minute time frame, we've seen this pattern where dip buyers were getting annihilated, buying the lower highs and lower lows. Didn't make sense. We've broken that pattern. Now, this was the first higher high above the 5-day moving average. I don't want to buy that because it got extended through there and the 5-day moving average was declining. The 5-day moving average is still declining. On Monday, we get rid of this data. So let's say Monday morning, we drop down like this. In the first hour and a half of the day, we get rid of these bars. And then as it rallies, if it rallies then up to this level, then we average these bars out, which means that 5-day moving average will be flattened out. On Tuesday morning, we start to get rid of this data. And if we're over here, that means the 5-day moving average will be rising. Try to do that math with an exponential moving average. You can't do it in your head. I like to anticipate the direction of the 5-day moving average. So if it does something like this, then I'm interested in Airbnb. I'm not interested on this pullback. Why would I want to lose 20 points? Instead, I want to look at and say, I want to buy here, and then I would set my stop, maybe half of it here, half of it there. If the stock goes down and stops me out, it tells me it wasn't meant to be. I have no control of that. But if instead it doesn't do this, instead it does something like this, well, then of course I'm interested in it. Let's take a look at Ethereum. Well, actually, let's look at gold here. Gold is, still a pain in the ass. I don't really, I'm only following up on it because I had mentioned it at the end of last year. It does look bullish overall, but this is just one of those markets that always looks bullish and never really seems to do anything. It's one of the most frustrating markets there is. It held this anchor. That's good to see. Oil is still trying to stabilize in this zone that we've previously mentioned. It's not really bullish. It's just stabilizing maybe. And then Ethereum, I've wanted to follow up on that because we still are stuck at the anchored volume weighted average price from this May of 2021 high. We are still stuck below that. We keep getting rejected. However, we're holding above the anchor from this low right here. That's what this daily time frame. So up on top, we have the weekly, on the daily over here, and 2 hours over here. So Ethereum is still building for a potential break, but it's just kind of neutral right in here at this moment. Thanks for tuning in and have a good weekend.